Hey everyone, after a dream rally since its IPO, Affle India share has corrected significantly. Its share price has zoomed from levels of 168 in 2019 to 1500 in January 22. But since last 16 months, Affle India has declined nearly 40% and currently trading at levels of around 910. Now if you have been following my video, I have discussed Affle India multiple times. Last time I covered it in my next multi-bagger series and discussed its business model and growth prospects in detail. So recently it has declared its Q4 results and I received multiple requests to cover this company. I'm sure many of you would be confused about what to do with Affle India, whether to hold it or accumulate it or sell it. So in this video, I quickly want to share the latest Q4 results and management guidance for FY24 along with my viewpoint on this company. Again, needless to say, this video is only for long-term fundamental investors, not for traders looking for short-term tips. And this video is only for educational purpose. Alright, let's get started. So Affle India has reported a revenue of 355 crore, which is up 12.9% year-on-year. Please note that Q4 is a seasonally weak quarter. So right comparison is on year-on-year basis. So on revenue front, the growth has certainly slowed down against its year-on-year growth of 32.6%. Company mentioned that the reason for slowdown in revenue is due to slowdown in developed market due to global macro headwinds with fintech and entertainment sector witnessing a severe impact. Now if you look at the revenue breakup by geography, India region contributed 34.7% and international business contribution in revenue is 65.3%. Within international business, the revenue is divided into developed and emerging market. On individual growth front, Indian market has grown at 20.5% year-on-year, while international market growth has slowed down to 9.3% year-on-year, mainly due to slowdown in developed region. Now, if you look at the CPCU business performance trend, its converted user base has grown 10.4% from 56.6 million users to 62.5 million, and its average cost per converted user has remained flattish. Company has mentioned that during these uncertain times, while its peers have dropped the pricing, it was able to defend its average cost per converted user. On operating profits, its EBITDA has grown by 22.1% year-on-year, whereas its net profits have declined by 10% on year-on-year basis. So overall, the Q4 results were not good, and honestly, I'm not surprised by the results. If you watch my previous video on Affle, I clearly mentioned that there are macro headwinds in developed market that can impact the growth prospect of Affle India in near term. That is precisely the reason why Affle India has already corrected 40% in last 16 months. So market has already factored in the downfall. Now the most important question is, what next? How is the growth expectation for FY24? Let's have a look. So in FY23, despite the macro headwind, Affle India revenue has grown by 35%. Although for FY24, management has given a growth guidance of around 20 to 25%. But they have also mentioned that they are looking for acquisition opportunity and looking to close at least one merger and acquisition opportunity in FY24, especially in gaming segment. So inorganic acquisition will be an additional revenue opportunity on top of your 20-25% growth guidance. On margin front, Affle India has delivered around 20% EBITDA margin in FY23. Within that, its organic business EBITDA is around 25%. So acquisition that Affle India has done in the recent past would take more time to improve the margin. But gradually, there will be margin expansion in the future. Apart from this guidance on growth, company's management has taken some very important decision to boost Affle growth. So first decision is reorganization. Company has reorganized its organization structure where its CEO, Mr. Anuj Soham, will personally head the developed market business in FY24 and everyone will report to him directly. The employees are given additional responsibility to create more upsell and cross-sell opportunities for aggressively growing the business. Then second important update is on Apple iOS. In 2021, Apple rolled out major changes around privacy. Basically, it introduced a new privacy feature called App Tracking Transparency that made it difficult for digital advertiser to track user behavior. The impact of this change was so huge that Facebook mentioned that it would impact the revenue by $10 billion. So digital advertisers have to realign themselves with new privacy rules, and Affle mentioned that company has updated its algorithm to get the first mover advantage. Then third important update is FL is looking to close at least one merger and acquisition opportunity in FY24, especially in fast growing gaming segment that currently contributes around 10% of its revenue. Overall, the new strategy will start showing result in Q2 of FY24. So that's an update on quarter-on-quarter basis. But as a long-term investor, we need to look at the bigger picture. Because if the long-term growth prospects are good, then short-term correction is a great opportunity to add quality stocks. So let me share my take on FL India long-term growth prospects. As far as long-term prospects are concerned, it is a no-brainer that the future of digital marketing is very bright. As per research, global digital ad market is expected to grow by 9%, and emerging markets like India are expected to grow at around 25 to 30%. For instance, if you look at the developed market, the digital ad spend in countries like your UK, US is around 70 to 80%, whereas in India, the digital ad spend in 2021 was just 29%. Today, India has majority of population in the age bracket of 18 to 30, and these people prefer smartphones to communicate. And since more and more consumers are preferring to use smartphones to interact with your digital platforms across your e-commerce, then OTT, entertainment, fintech, online gaming, then your healthcare, telecom, education, this in turn is driving the need for advertisers to reach consumer on smartphones and adopt omni-channel marketing strategy. Hence, every company today is exploring the digital marketing channel to promote their products and services. And this trend would continue to grow in the future. And FL India's biggest strength is its ROI-driven CPCU business model that would continue to create sustainable growth. If you want to understand more about its business model, do check out my previous video. And if you want to know which stocks I am holding in my portfolio and which stocks I am buying recently, there's a weekly series on my website. By the way, now you can also listen to me on Spotify. Just search Personal Finance 101 with Sahil Bhadvia and you'll find it. You can even watch my video on Spotify. Friends, when FL India touched levels of around 1500, many long-term investors would have thought that if FL India falls to levels of 1000, 1100, then I will accumulate more. Today, it is at levels of 900. But I'm sure many of you would not have the courage to buy FL India today. That's how our mindset works. We wish for correction in quality stocks when it is rising, and when there is a correction, we don't have the courage to buy it. Because we get so hooked to the short-term event that we forget the long-term bigger picture. In fact, there are many such cases. For instance, look at Infosys. Today, this company share price has corrected more than 35%. Now, if a company like Infosys that is not just a leader in India, but among the top IT companies of the world, is it an opportunity to accumulate it or to sell it? Then there is another example. Look at Divis Lab. Many people miss the opportunity to add Divis Lab at pre-COVID levels. But this stock has also corrected more than 40% today. Again, a global leader in generic API manufacturing with immense growth prospects. Is that an opportunity to accumulate Divis or sell it? For me, it's a no-brainer. You rarely get such opportunities to accumulate top blue chip stocks at low levels. And that opportunity only comes with negative news. Otherwise, if the news is positive, you won't find blue chip stocks available at such low levels. Then look at Dixon. A few quarters ago, everyone was going gaga about it. And today, this company share is down 46% from its peak. Just ask yourself, will you stop using those smartphones, LED TV, wearable devices, security cameras? So try to look at the long-term bigger picture. Then there is another problem. When the quality stocks fall, some people get more greedy and they wait for more correction. I'm sure a lot of you would be thinking to buy FL India when it falls to levels of 800, 850. But I always say that nobody can time the bottom in stock market. It might touch those levels and it might not. So there's no point speculating. If you think that the long-term prospects are bright, better approach in this situation is to accumulate the company in a systematic manner. Now, I'm not saying that immediately in the short term FL India share price will jump. No, because the sentiments are still negative in the developed market. However, I know that today FL India is just 12,000 crore company and I see huge growth potential in this company in the next 10-20 years. And even the DIs are utilizing this correction in FL India to accumulate the stock. DI stake is up from 6.37% in March 22 to 7.5, 9.1, 10.5 and latest 11.95%. So DIs have almost doubled their stake in last 1 year. Although FI holding has reduced in the same period, but net public holding has reduced. As far as near-term targets are concerned, After the latest Q4 result, two brokerage houses have initiated their coverage. So Axis Direct has a buy call with target of 1250 and ICICI Direct has a hold call with target of 980. So overall, like I mentioned, in the near term, there are headwinds in developed market that can impact the growth of FL India, and overall the revenue growth guidance for FY24 is around 20 to 25%. Since FL India always commanded a premium valuation, even after 40% correction, it is trading at a P ratio of 50. So from valuation perspective, in the near term, it is certainly not cheap. But considering the bright growth prospects in the long term, FL India is a great pick to accumulate in a systematic manner. The more it corrects, the better would be the valuation. Now tell me in the comments, are you holding FL India in your portfolio? And are you utilizing this correction to accumulate FL India or waiting for more correction? If you find this answer useful, share it with your friends. I'll see you in the next video. Till then, take care.